Hello, everyone. Welcome to Options with Doug, streaming live on Monday and Wednesday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Get rid of these. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @DougPless. Just want to let everyone know that Bookmap is encouraging everyone to join Bookmap Discord. There are a lot of advantages. Quite often, Bookmap has Discord-only webinars, like the Funded Trader webinar series. You will need a subscription to fully participate in Bookmap chat and Bookmap Discord. There is a free subscription available, and once you subscribe, you will need to verify your account to, again, fully participate in Bookmap Discord chat and watch the streams in Bookmap Discord. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. Certainly in the large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index. SPY is the ETF version of an index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the Nasdaq 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups, and when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset, excuse me, can be taken with futures contracts, shares of stock, or options, depending on the asset as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Stephen. Welcome. Glad you're here. Here's my agenda for today, Wednesday, January 8th. First of all, I want to go over news items, economic data, and events for this week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll take a look at the live market. When I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's start with news items. First of all, today, FOMC minutes come out at 2 p.m., so I'll stop whatever I'm doing. If I do forget, someone please remind me at 2 p.m. We'll watch the market reaction to the FOMC minutes. All right, so that is for today. Yesterday, there were a couple of data items that came out at 10 a.m. PMI, ISM Services PMI, JOLTS data that came out 10 a.m. again, both better than expected, and the market did not like that data and move lower. We'll take a closer look at that in just a minute when we're taking a look at the SPX charts. All right, so again today, FOMC, tomorrow market closed due to the National Day of Mourning for former President Jimmy Carter. Then Friday, back open again, jobs report at 8:30 a.m. Eastern Time, and then Michigan Consumer Sentiment at 10 a.m. All right, this is the, moving on to positional analysis now. This is the S&P 500 ES Futures. Pretty choppy day today. And let's take a look at a higher time frame. I'm going to go to the SPX, the underlying index. I'm going to start with a one-day chart for SPX. This is a one-day chart for 1 year worth of data. And you can see the rally that has been going on for quite a while is under a little bit of pressure now. So that is the Thinkorswim one-day chart. Let's take a look now at a shorter time frame. Let's go to a 30-day 1-hour chart. And let me point out some key events here. So we'll break this down. Start with the price action. Key events. The SPX reaction to the December FOMC minute meeting and press conference. SPX made a low right around 58.32. Moved back up to this downtrend line. Reversed lower again. And again found support right around 58.32. Just a little bit lower. Rallied back up almost to the trend line. And then this is yesterday. Again, that data came out. And SPX found resistance right at the 6,000 absolute gamma strike. And note the 6,005 call wall was just above that. That was not a significant level. Anytime the call wall, any of these key daily levels are at levels that are typically not zeros or 50s, that is usually not significant. All right, so that was yesterday. Reversal at the 6,000 call wall, and maybe we'll see heading back down toward the 58.32 level. That is yet to be determined. So SPX really in the middle of that range. All right, let's take a look at some of the other levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. Based on the closing price for SPX from last Friday, those levels remain in place for the entire week. Dashed blue lines showing the lower and upper daily expected move, also based on the options market. This is based on the closing price for SPX from last Friday. I'm sorry, yesterday. And I do post those levels in Discord every day the evening before. So SPX trading inside of both of those ranges. And this is what the options market is pricing in as a 68% move, one standard deviation expected to stay within that range for the time period, for the week, for the day. All right, so those are the expected moves. I think much more important are the Spotgamma levels. These are the dark red lines. These are based on gamma-weighted open interest that provided to Spotgamma subscribers on a variety of trading platforms. Again, this is Thinkorswim. I'm going to point out the key daily levels. First of all, here's the put wall. That's at 58.70. That's a strike with large net negative gamma that can be expected to act as support. That level did move down from yesterday. We'll see why it moved down to that level in just a minute. All right, the next level up is the volatility trigger. Note the cluster of levels here. Volatility trigger at 59.40. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. And note SPX is trading below its volatility trigger in a negative gamma environment today. Just above that is the call wall at 59.40, 45, also kind of an odd level. We'll see why in just a minute. That's a strike with large absolute positive gamma. That can be expected, net positive gamma, and that can be expected to act as resistance. And then finally, the absolute gamma strike is at 6,000. That's a strike with largest absolute positive and negative gamma. So these levels below, the volatility trigger, put wall, and call wall, all move lower. That's a bearish hat trick for SPX. So that is bearish today, those three levels moving lower. And for SPY, the volatility trigger and put wall also move lower. The call wall did move higher, and the absolute gamma strike did move lower. So overall net, bearish shifts lower end levels for SPY as well as SPX. All right, let's wrap up our view of SPX with a 1-minute chart. Here's that reversal yesterday at the 6,000 absolute gamma strike. Looks like price was chopping around and then dropped pretty sharply when the 10 a.m. data came out. Better than expected. Market didn't like that. Continued to trend down for the rest of the day. This is price action for today now in the dark shaded portion to the right of this chart. And it looks like the zero gamma level at 59.19 is in play for today, acting as resistance. Let's take a quick look at our SPY chart. Dark shaded portion showing the regular trading hours. Volatility trigger is up at 590. Acted as resistance earlier today. And then earlier today, the 586 level acted as support, and it traded to 586 to the tick. Neo asked, why do you say it was in negative gamma? Trace was showing positive gamma region all day. We'll take a look at that in just a minute. So sometimes Trace can show different data than gamma notional at the beginning of the day, as well as the relationship to the volatility trigger. But I would take that as caution, looking for bigger movement when SPX is below its volatility trigger. So more about that in just a minute. All right, so that is SPY. Let's go to Bookmap now. So Bookmap, I have levels on this chart, SPX levels, SPY levels. Here's that 586 level, Acted as support a couple times today. Before the cash open, after the cash open, here's that 59.19 zero gamma level. That's SPX acting as resistance. It may be acting as a resistance again. So I have SPY levels and SPX levels and also key ES levels on this chart. And note there is a difference in price between ES and SPX. Today it's right around 43 points. So for example, I'm showing the SPX 5900 at ES 5943. And I do post those index relationships that I'm using every day in Discord. All right, so those are the levels in play for the S&P 500 ES futures. 586 on the downside, and the SPX 59.19 zero gamma level on the upside. Let's take a quick look at Nasdaq. Go to the NQ futures of Bookmap. And one thing I didn't mention on the ES chart, same here, this breakdown really happened around 6 a.m. I think there was a news release regarding tariffs and inflation. Market dropped sharply lower right around 6 a.m. All right, this is the NQ futures of Bookmap. Let's take a look at the underlying index charts. First of all, QQQ. QQQ is trading right around its volatility trigger right now at 515. And earlier today, the 512 level acted as support. 516 resistance. And the volatility trigger at 515 is the only level, Spotgamma level in range today. And prices chopped up and down around that level. Let's take a look at NDX. Zoom in just a bit. NDX 21,000 right around that level, acting as support. The call wall volatility trigger is up at right around 20,270 for the volatility trigger. Call wall absolute gamma strike at 275. And then zero gamma level and a combo level here. All right, back to Bookmap. Again, I have NDX and QQQ levels on this chart. Also key levels for NQ. And there were some questions in Discord about the expected moves. It looks like NQ found support right around its lower daily expected move. And just based on experience, I think NQ does observe, or these levels are more important, the expected moves for NQ than ES often. So here's that 516 resistance level, 512 support for QQQ. All right, let's wrap up our positional analysis by taking a look at Gamma. I'm going to start with Gamma notional at the beginning of the day. This is market maker's position on the Gamma curve at the beginning of the day. For the S&P 500, Nasdaq, Russell 2000, note all these numbers are negative, with the exception of NDX, which is very small. These numbers all shifted lower from yesterday, so more negative Gamma than yesterday. That's market maker's position on the gamma curve at the beginning of the day. All right, let's take a look at trace now. This is Spotgamma's trace tool showing gamma for the day. What it's showing is, as Neil mentioned, a blue shaded region, slightly blue shaded, in between these strikes here and here. And what this is this is a large iron condor. So these GEX bars are showing market maker's position. So this, let's take a look at the call position here. So I'm looking at this large blue bar. This is the 59.45 strike. Does that look familiar? That's the call wall. And it's also the short strike of this large traders, iron condor, the vertical spread, the short call spread. Market makers position as long calls there at 59.45. Again, that's the call wall for today. And then here's the 58.70 strike. That's the short put strike for this trader. Long puts for the market makers. Also familiar, that is the put wall. So those levels will likely change tomorrow. So trace is showing some positive gamma in between those two levels, but again, still trading below the volatility trigger at 59.40. That's shown here. Note also this stability index is quite low at 23%. Slow to rise, he says, FOMC minutes soon. You asked for a reminder. Yes, I did. So thank you for that. All right, so that is the picture of gamma today. So based on this, I was looking for higher volatility than what the market was showing today based on the negative gamma at the beginning of the day, as well as the low stability index. Looks like right now SPX is trapped in this region between this and this iron condor. Good for Captain Condor, as Spotgamma calls this trader, large trader with these iron condors. And then also my directional bias was negative, bearish, based on the shifts level lower in levels for SPX and SPY. QQQ volatility trigger and put wall shifted higher for NDX and QQQ. All right, let's move on. Let's take a quick look at some setups, and then we'll get back to the ES futures for the FOMC minutes. All right, so first of all, let's move on to execution now, taking a look at what options traders have been doing today. As always, I'm going to start with the SP 500, and this is the index hero signal showing options trades, market maker hedging activity for the index components, SPX, SPY, ES, and SPX. I've already separated it into puts and calls, and a rising blue line indicates traders are taking positive delta positions. They're selling puts. Also, a rising orange line indicates traders are buying calls. Market makers take the opposite side of those trades. In the case of the bullish lines, that indicates that traders, market makers would be taking the opposite side of those trades and buying ES futures to hedge their delta exposure. So you can see that from the open in the index, traders were selling calls, selling puts, and buying calls. That is a bullish continuation pattern when both the the orange line and the blue line are moving higher in the same direction. It took a while for that to work out. Let's take a look at the equity signal. And a little bit more choppy today, but I think has provided a closer signal to a closer signal to price action. So a couple things to point out. First of all, this call peak pattern. Full alert, sharp reversal in the call signal, and then a continuation pattern. So that was good for a short scalp right after 10 a.m. Call peak pattern, and then a bearish continuation pattern. And that pretty quickly resolved to a bullish continuation pattern. Another, not really as sharp a call peak, more of a rounded top, but a flow alert. Then a bearish continuation pattern. Another flow alert. Bullish continuation pattern. Another flow alert. And now back down to a bearish continuation pattern. So when you study this, take a close look at it, look at these alerts and the patterns. This is providing a very good guidance for price action today in the S&P 500. I've got 3 minutes. Let's go to Bookmap. Go back to ES. Take a look at those setups from this morning. So here's that 10 a.m. call peak pattern. And so we know that traders were taking negative delta positions in the S&P 500 equities, selling calls and buying puts. Note also the iceberg orders here. Falling blue line. Traders were fading this move higher with iceberg orders, large orders they use to hide their size. And then as price moved down to 586, again, remember that bullish continuation pattern started pretty quickly after that move lower. Traders started buying calls and selling puts. Cumulative volume delta was already rising. Buy stop orders helped to fuel that move higher. A final stop run up to the 59.19 level. And also large traders were buying that move. They were trading in the direction of price for that move higher. So very bullish move up just before 10:30. As traders were buying calls, selling puts, aggressive buyers shown by rising cumulative volume delta, buy stop orders helping to fuel that move higher, and then also large traders buying with iceberg orders. And again, it looks like a final stop run up to 59.19. Another kind of rounded call peak pattern. Then hedging flow shifts bearish. All right, I've got about 10 seconds to the FOMC minutes. I'm going to stop here. So we know so far today that the S&P equity signal has provided an excellent guidance for price, both bullish and bearish. All right, I'm going to open up a on another screen. I'm going to open up YouTube and watch CNBC for a couple of minutes, see if they have any remarks regarding the FOMC minutes. So far, not much of a reaction. And trade right around the 59,000 level, SPX 59,000. And Stephen asks, which is more important, volatility trigger or absolute gamma strike? They're both important and for different reasons. And volatility trigger, look at that as a risk boundary. Below that level, look for increased volatility, increased risk. And above that level, look for more grinding price action. And let's say SPX was trading above its volatility trigger. Then I would look at the absolute gamma strike as a potential pinning level if price moved up to that level. So they're both important, but they are different. So both important for different reasons. And D&T Matter says the combined All right, so I'm watching the news feed here. Rate cuts seemed as finely balanced. Some wanted no cut in the last meeting. All right, let's go back to Hero. All right, again, D&T Matter says the combined index Hero signal was completely contradictory to price while the equity was helpful. So let's go back to the index signal. And that does complicate with having these two different signals, a lot of different players. The S&P 500 is much more complex than single stocks. So this does, if you're using Hero as a primary basis for trading, it does make the S&P 500 a little bit more complex. But, looking in hindsight here, you can say this index signal was correct. It just took maybe about 45 minutes for it to play out. So after about 10:15, it did it is showing a more clear signal. So what I do, I just look at both all day. So one key is to separate out puts and calls early. So that's what I do. As soon as I start looking at Hero, typically after the cash open, I switch to puts and calls, and I leave all Hero signals to puts and calls. Let's go back to the equity signal. So typically the index signal is a little bit more noisy, not necessarily the case today. And the equity signal is a little bit smoother. But I thought the equity signal today did provide more clarity. Taking a look at YouTube here, Floyd's Garage, welcome, glad you're here. Sistock asks, Doug, please explain the Hoy's colored dash lines. Please, sorry, I'm not sure I understand your question. Sistock, if you could please clarify. I do draw my own lines on the Thinkorswim charts. And old boy is asking about the iron condor. Have you noticed the iron condor and the SPX options from the start of the day? Yeah. Let's go back to trace. So first of all, Spotgamma did mention this in the founder's note. And I believe it was, let's go back to the beginning of the day. We'll go back to the 9:30 cash open. 9:30 cash open, oh boy, it's already there. Spotgamma did mention this in the founder's note. There was an iron condor yesterday, and it looks like, I believe it was a loss, just based on the strikes of the iron condor itself. Take a look at the Spotgamma founder's notes for more information. So what this Spotgamma calls this trader, Captain Condor, doubled down to make up for the loss yesterday. So put on this condor again in large size. So there it is. We're looking at 9:30 today, and it was already there. Let's just step through time pretty quickly. And Stephen asks, so yesterday's iron condor didn't work out. That's correct. So the way an iron condor works, let's take a look at Thinkorswim. Here's an iron condor. This is an unbalanced iron condor. So it's the way you make money on an iron condor is for time decay. This is further out in time. This is the February monthly options expiration. The Captain Condor iron condor that I was just showing on trace is a 0 DTE iron condor. So this is a longer term iron condor. Price needs to stay within the short strikes to make money on this. So it's your selling premium with this iron condor. So that's how an iron condor works. All right, let me check for more questions. All right, so oh boy, hope that answered your question. Yeah, the iron condor was there at the beginning of the day. And D&T Matter says, replying to Stephen, found it tricky today, mixed signals. D&T Matter agrees. Spotgamma Hero and Trace has had major conflict. That can be the case. And it does take time to interpret this information. I find it hard to trade without Hero right now. I've looked at it so much. I've watched Hero for 4 or 5 years, maybe 4.5 years. All right, so let's get back to Hero now, so we can see the equity signal ticking up again. Check index. Also moving up. Price responding. And you can see ES is responding higher as well. Back up to the 59.19 level. All right, let's take a look at some stocks. First stock I want to take a look at is Apple. And I do find the Hero signal easier to interpret for stocks, single stocks typically. Not all single stocks, but many. and that is due to there's only one hero signal. It just makes it easier to interpret. All right, so let's go to hero, go to Apple. I'm going to zoom in on a bit. So remember, when I was looking at the S&P 500, I was focusing on patterns. The call peak pattern, continuation bullish and bearish continuation pattern. And I found a new pattern here. This is I'm calling this the institutional kickoff. Right there, that's a large block order, some large institution buying a large number of calls. And that kicks off a move higher in Apple. So new pattern here. Traders buying calls, very simple. Traders buy calls, market makers sell the calls, and they have to buy stock to hedge the delta exposure. Much simpler, easier to interpret than the S&P 500 sometimes. So institutional kickoff, kind of a delayed opening drive there. Traders buying calls. Again, market makers selling call, buy stock. Call buyers take the foot off the gas. That fuel that was driving price higher starts to diminish. Traders start selling calls, buying puts. Price moves lower. D&T Manor asks, do I use Trace? Yes, I do. D&T Manor has a hard time reading it. It does take some time to interpret. I have written several articles for Spotgamma outlining the use of how I've used Trace in several case studies. I don't know if they publish those in their blog or not. We'll get back to Trace in just a minute. There are 3 different heat maps, 3 different views of Trace that can be used for different, they have different uses. Let's go through these stocks and then we'll get back to the S&P 500. All right, so there's the setup in Apple, institutional kickoff, delayed opening drive, and then consolidation. So this institutional kickoff, that was right around 950. So let's go to Bookmap, go to Apple, 950. So no price absorption at the 240 level. Large call buyers come in. Price starts to move higher. Price makes a higher low. Call buyers come in. Price moves above volatility trigger. Call buyers take the foot off the gas. And then price consolidates. All right, so that's Apple. Next stock, Google. And let's go back to Hero. And this is a combination of looks like a series of large orders, call orders. So somewhat of a institutional kickoff, as well as a little bit of a delayed opening drive. Traders buy calls, market makers sell the calls, and they have to buy stock, take the foot off the gas. So a consolidation pattern after the quick move up as traders are buying calls. And traders really started buying calls right around 940. Go back to Bookmap. A little bit of a pullback, back to VWAP. For that move in move higher in Google. Let's go to Microsoft. Opening drive delayed a few minutes. Institutional kickoff. Price moves higher. Breaks above the 425 hedge wall. Again, call buyers take the foot off the gas. Start selling calls. Price moves lower. Start buying puts. So a little bit of a bearish continuation pattern there. So quick move up in the morning and then a grind lower as traders stopped buying calls and then started selling calls. Back to Bookmap. Pullback entries as traders are buying calls. And that lasts for maybe a half an hour or so. Next stock, NVIDIA. Bearish day today in NVIDIA. Let's see what options traders are doing. A little bit of a delayed opening drive. A little bit of institutional help. Then a call peak pattern. Let's zoom in on this just a bit. And by the way, this is my favorite pattern. Very reliable, this call peak. Call peak pattern. Then a bearish continuation. Then consolidation after that. Nice bearish setup there with the call peak pattern. Go back to Bookmap. Taking a look at order flow here. You can see the shift in order flow. Green volume dots show aggressive buyers. Those are market orders. You can see then all the magenta dots come in. Aggressive sellers move down at that call peak pattern as traders then, after they start selling calls and buying puts. Oh boy, I'll take a look at SPX in just a minute. We'll get back to Trace. Dan K asking, Hero, are those only 0 DTE calls being bought or all expirations? All right, so let's go back to Hero. All right, I'm looking at all trades. So if I was looking at only the total signal, puts and calls combined, that would be purple. And if I wanted to take a look at next expiry, so for a stock expiration, the next expiry is showing the Friday expiration. So for stocks, there are monthly and weekly options expirations. And then for the SP 500, the index components, SPY, ES, SPX, there are daily 0 TTE options that expire. So I'm showing all expirations. We can take a look at next expiry. I normally don't do that. I normally just look at all trades. But the green line here is showing calls. And the That is the next expiry. That's the Friday expiration calls. And then this, I don't know, kind of lavender line, lighter blue maybe, is showing puts for the Friday expiration. So that's dark blue line, all expirations, orange line, all expirations, and then the green and light blue line are next Friday expiration. All right, let's turn that off. So you can see these were longer term calls, longer than the Friday expiration. Traders buying calls starting right around 9:50. And by the way, I skipped over Nasdaq today, but this is the Mag 7 signal. Zoom in on this. This should look familiar. There's Mag 7. There's NVIDIA. Strong move up, then consolidation. All right, let's wrap up our view of stocks here with Tesla. Zoom in a bit. Of the stocks that I follow and trade, Tesla is the best stock to trade if you're using Hero and options trades as your guidance. I think it is the easiest to interpret. So looking at price action this morning, pretty choppy in the morning. Then a fantastic call peak pattern. Flow alert, price breaks above the 400 key gamma strike. Call peak pattern, price reverses lower into a bearish continuation pattern. Then more chop. So best setup was this short setup. As price broke above the 400 key gamma strike, formed that call peak pattern. All right, let's go to Bookmap, take a look at Tesla. Let's zoom in on this. All right, there's this call peak pattern, inverted V reversal. Aggressive sellers start to come in. Let's go back to Hero now. Let's take a look at this this V move lower, reversal higher right around 1230. Another flow alert, and then a bullish continuation pattern. Flow alert, bearish continuation pattern. All right, let's go back to the S&P 500. Take a quick look at the index signal. And really after 1015, I think, providing a good signal. Let's take a look at the equity signal. Also providing a good signal all day. So for those of you who are asking about this, I look at both. I just switch back and forth. And then often I will have two tabs, so I don't have to switch back and forth. One with S&P 500 index, one with S&P 500 equities. And I'll just move from one tab to another. All right, let's go to Trace. All right, Trace, this is the gamma view, the gamma heat map. So let's take a look at some of the other views. Let's go to delta pressure. Going to zoom in just a little bit. All right, the hero line is this purple line here. And I'm showing the index hero signal here. All right, so let's step back in time. This is delta pressure. So the blue zone would be buying support. Red zone would be selling pressure. It's kind of like a heat map for options. Let's go back to the beginning of the day. And we'll step through time. Oops. Click the wrong button there. Let's just do this manually. Step through time. So the S&P 500, SPX was moving down into this blue support zone. We'll step through in 10-minute increments. 10 a.m. now moving up toward the red selling pressure above. Price reverses lower and is showing this a little bit in hindsight. Back down into the blue support zone. Price starts to reverse higher. Back up into the selling pressure. All right, let's go back. Let's go to the current price action now. So looking in hindsight, this is showing buying support. All right, let's zoom back out a little bit. Now we're going to go to charm pressure. And what this is showing is a potential pinning price at the end of the day. So what we want to look for is, first of all, large positive gamma that would be attracting price. That's at that 59.45 strike. Again, that's the short call strike of Captain Condor's Iron Condor, and market makers along calls at that strike. Then let's go over here. We're looking for a zone. Let me zoom in just a little bit. Looking for a zone between blue buying support below and red selling pressure above. So right now, this looks like the most likely candidate for a pinning target at the end of the day. That's showing it somewhere between 59.40 and 59.45. And you can see the vortex lines here kind of leading up to that price. And D&T Matter says, so my question on a delta is, it always looks like it's in a neutral zone. Do you find it helpful? Yes, not every day, but sometimes. Sometimes more helpful than others. So for me, given the choice between Trace and Hero, I look at Hero first, then I look at Trace for confirmation. But I find both are helpful. But I've used Hero for, ever since it's been available, ever since it was only a Bookmap add-on. So I'm much more familiar with how Hero works. But I do find both helpful. So I'll keep an eye on this. I need to wrap it up, but I'll keep an eye on this, and I'll post the charm chart at the end of the day. We'll see where SPX ends up. So right now at 2:30, this is showing a potential pin somewhere between 59.40 and 59.45. So I'll follow that up with a post in Discord at the close today. All right, any final questions? Anyone have any stocks they want me to take a look at? All right, everyone, thank you very much for watching. Thanks for your questions and comments. Remember, market close tomorrow. Jobs report on Friday. And then I will see you on Monday. All right, everyone, thanks again. And I will see you on Monday. Bye.